Hey there, welcome to Third Thursday, Lunch and a Divorce Lawyer. I'm attorney Peter Olson, Chicago Family Law Group. Thanks for joining us. And I'm really excited to have a guest this month, so you don't have to hear me blather about different family law issues, and you can actually get some real expertise from somebody else. And yeah, super happy to have Jeff Cook, who is I don't know. I think we've been friends for ballpark 15 years. Who's a senior vice president of residential lending? Correct title, Jeff?
Nailed it. Good job.
At Draper and Kramer, and I don't know. You're in the mortgage lending business. Is that a fair summary?
Absolutely. Residential mortgage guy, and been doing this for nigh on 20 years. And yeah, almost the whole time you and I have known each other. So we go back, and yeah, I'm excited to be here. Thanks for having me.
Sure, great. Hey, so I don't know. Let's just start here, Jeff. Right, we're involved. I mean, me as a family law attorney, sometimes divorce attorney. So they're not the same. And sometimes I'm actually trying to help somebody stay married, but sometimes, they're going through divorces.
Mhm.
Um, you're oftentimes dealing with a home, and I don't know, at a real broad level, real generically, typically somebody's going to sell that home. A couple's going to sell a home during or after the divorce process, or they're probably going to refinance that mortgage, and
Right.
one of the parties is going to keep that residence. Um, I don't know. Is that what you're seeing? I mean, that's what I'm seeing as a family law attorney. Any kind of big thoughts on I
Yeah.
don't know, to sell or not to sell or to refinance? Any opinion on that?
Well, that does touch on a few different subjects. I mean, the first thing I would recommend on all of this
Sure.
is to keep in mind that timing is everything, because actually it's a lot easier to make your financial moves either before any divorce gets filed and begun officially, or after, when it's all completely resolved. Sometimes I have people tell me that they want to, in preparation or in anticipation of the divorce, they want to make some moves, refinancing or buying, selling and buying, and it's in the middle. It's right. It's after they file, but before the divorce is finalized, and that leaves them in limbo financially speaking, because one of the chief goals and jobs of the lender is to be able to accurately document somebody's financial picture, and that includes
Right.
their responsibilities and debt burdens, whatever they are. And so, if you have filed a divorce or in the midst of the proceedings, but it's not yet resolved, it's really tough to get something done because you can't resolve those financials, and so that can leave people in limbo. And so, if they wanted to do some refinance or property transitions in the middle of that process, it can be a lot more difficult. So if they can anticipate and either do it kind of before the official process gets going, or know in advance that the timing is going to be better afterwards, that's the way to go. Now, of course, your question was, is one of those better? And I think, it's going to depend on the situation, because rates for refinancing and purchasing are amazing, obviously. So interest rates are going to be very similar. And then so it's going to just depend on kind of their needs, whether it makes sense to make a clean break and make a completely clean start, or whether they just want to stay in there. That'll work out in different situations. But yeah, it's what's most important is that they get clear on the timing. Timing, they say timing is everything. It's definitely true on this front as well.
Do you walk into that fact pattern too often? That sounds like a great idea. I'm just wondering if I'm thinking about myself. Do I walk into the idea where people are, I guess, amicable enough? We're going to go through a divorce,
Right.
and we're going to like sell this house. I don't know, 2 months before the divorce. You seen that situation often? It seems like an ideal, but I wonder if do you see it
Uh,
much?
yeah, that's it.
I mean, I'm just
It,
thinking,
de- it definitely is out there, but it's probably, given what leads to a divorce, is probably the minority. But, the refinance itself process, though, to lower the rates and stuff like that, I do see that a little bit more, where they realize, okay, in preparation, let's go ahead and not waste any more time. Let's begin a refinance and save some money. but it's in the midst after filing, and they can't really, they're just on hold then, which is okay. It's not the end of the world, but it does leave them in limbo where they wanted to get resolution on that. And the refinance situation is one that sometimes both people can agree to in advance, because it could be advantageous to both of them to get that settled.
Yeah. Is just the fact that there's a case filed, does that kind of lend uncertainty to you, even if it's just like, right? I mean, we're going down those tracks. Like we were talking about maybe an ideal where it's like right? We're just still a married couple for lender purposes and we're selling. But now we've filed a divorce, but from where I'm sitting, like a case is just sitting there. It's just like a case and very little activity. Do you care about that on the lender side? Just like a case is on file? Really?
We do. Yeah, it ends up coming up as in the name search.
Right. I understand that.
Yeah. So it becomes
just like even the potential, like just the open litigation is bothersome.
Exactly.
Interesting.
That's going to leave everything in limbo, and therefore, in most cases, the lender's not going to be able to move forward with any financials in that case at that point until it actually gets resolved. One time, that because of that situation, somebody ended up, they weren't even sure they kind of started the process, but it wasn't really moving forward. But just because it was posted and it was out there, they weren't able to move forward on their financials and on their loan process. So in this particular one instance, they ended up just closing it out and pulling, shutting that down. And so that was fine at that point. But it does inject, like you said, a lot of uncertainty, and lenders can't actually at that point determine what the financial responsibilities are going to be.
Yeah. Yeah, my worldview, I think, is more people should sell than actually do in the divorce context. I feel like, I'm going to keep my kids in the school district or something. And I mean, I'm not downplaying that idea, but I don't know.
Do you think
the fresh start / get out from under probably a larger home than you need now that your family's getting smaller, and clearly there's a financial breakup piece to this where your income's getting smaller generally. There's it a little bit like hold on to the past instead of, I don't know, that's my psychology on it is like I think the fresh start and the lower mortgage payments probably the better move, but I do tend to see a lot of people want to keep
I would
the
agree
house.
Peter. I see some of the situations naturally lend themselves to people stretching, because now they're managing that same debt load by themselves. And by the way, often it comes with having to raise the loan amount to send off some of the equity, per the agreement to the other party. So it's not even sticking. So that loan amount goes up, and now there's only one person managing that debt. And so in some cases, you do see that people are stretching to do that. And the notion is, like you said, often they don't want to further disrupt other elements of their family life, but it can come with a bit of a cost. Now, the only other mitigating circumstance related to what we're talking about, though, is that, finding other homes right now, that's a little bit of a challenge. Yeah, inventory is really tight. So that would be a consideration as well in the mix for sure.
It's been a while since I've refinanced or purchased. Is there much of a difference on a general interest rate if I'm doing a refi versus a generic purchase?
There actually, it's just changed, because about a year ago, the government introduced an additional rate increase for refinances that didn't used to exist, but now, and then was the law of the land for about a little over a year. And we just figured that was going to now be the new normal going forward. But about a week ago, they just, decommissioned that, and now rates are back to on par the same. And one other thing, which is good news, so now you're not paying extra for refinancing versus purchase. So that's helpful. Another important thing maybe for people to realize is that if they do elect to stay in the home and they do the refinance, a lot of times, as we mentioned, that's going to come with this process of increasing the loan amount so they can get cash equity out to the other spouse or the former spouse and pay them off per the decree and the agreement. But a lot of lenders end up writing that loan up because it's a higher mortgage than the prior mortgage. In most circumstances, that's designated a cash out, a special kind of refinance called a cash out refinance. And finances that are designated cash out refinance, that particular kind of refinance where that new mortgage balance is higher, that comes with a higher interest rate uniformly. But there is an exception that is super important, which relates to if you're settling a marital settlement agreement and it's cashing out for the equity to give to the spouse per the settlement agreement, former spouse, then that actually does not have, it's no longer considered cash out mortgage. And so a lot of lenders don't always actually know that because it's just one of these important but sometimes lesser known guidelines with Fannie Mae, and therefore people need to be on the lookout that they are really getting kind of the best terms with somebody that's aware of the process enough with regards to divorces that they don't mistakenly get a higher rate and a rate adjustment that really shouldn't apply for that divorce refinance post-divorce.
I see. That's interesting. Yeah, totally new information to me. So if I'm cashing out to pay off my gambling debts, that's just a joke, or to, I don't know, right, do a home remodel or something, kitchen remodel, different rate than I'm paying via marital settlement agreement and divorce. That's what I just heard. Is that right?
Yeah, in most situations that's the case. There's a few caveats and exceptions, but in most situations that is the case. So definitely that knowledge can be an important savings tool. So.
Okay. Hey, Jeff, on speaking, just going down that refinance road just for a few minutes here to kind of, get some good info and, as we come to a conclusion here, what's always interesting to me is the both sides, I think, of child support or maintenance and how those are viewed
Right.
on the lender side.
Exactly. Well, that's actually
is that it? What is that? What is that on? Let's on the person who's refinancing. And now I'm receiving $1,000 a month in child support.
Right.
How are you viewing some of those? Some of those obligations, the incoming obligations. Is that the same as my salary from my job, or what's the picture there?
Yeah, it depends on the situation. It comes up a lot, obviously, and people want to / need to sometimes use that income to qualify for the type and amount of the mortgage that they want. But it's very important to know in advance, if possible, that you can't use child support or maintenance income unless you have proof of 6 months history of receipt. But also, so the kind of the bywords here are consistent and continuous. And so the way that Fannie Mae fleshes that out is minimum of 6 months of payments, but they also have to be, consistent. And so they've got to be consistent in amount and consistent in timing. So you have that situation where sometimes people have received 6 months. Sometimes they don't even know about that, and they're not ready, so they can't count it at all. But sometimes they've been receiving it, but it's been informal. It hasn't been through the state system, collection system, and so they've been getting these amounts, and they vary. Either they vary in the timing of the month, or they'll get 2 payments in 1 month. All of that is a big, really messes with their ability to count this income. And so if they can just make sure, if it's not through the state collection system, that they kind of get their ducks in a row, because otherwise they're going to really have problems on their mortgage qualification.
That's interesting. Yeah, I don't know. From where I'm at in the family law system, I mean, yeah, there's a lot of what you're doing is there's an order that says something, right? Somebody's paying spousal support, somebody's paying child support, but you have a lot of cases and a lot of stuff in the court system is enforcement. In other words, there are problems with getting those payments. So
right. And sometimes they're getting it, but it's just the timing isn't there because they don't realize how important it can be. And so it's really good for people to get that all set up. If they can know that in advance, they can save themselves kind of a lot of headache and just make sure that they get it all done.
Yeah, that's interesting. And then on the flip side, right, if I'm the person with the hypothetical child support maintenance obligation,
right,
that's working, is that a kind of that's like the equivalent of, how are you using that, or how are you viewing that?
Right. It's a great question.
If I have the obligation affirmatively.
Right. Well, it's actually handled differently depending if it's, the alimony maintenance versus the child support. So if it's alimony and maintenance, then we just have to deduct that obligation from your income, and then we're ready to go. And the ratios, as long as they work out. The tricky part though with child support is that that's just a straight liability, or like a credit or debt obligation, and that really changes your financial percentages a lot. So it squeezes or restricts your financial abilities on paper, the way if they're going to count that child support as a debt burden versus with alimony where they just reduce the income. Makes a significant difference in the percentages on how a lender has to look at it. And this is according to the Fannie Mae rules or the federal rules.
Weird.
Yeah, it doesn't really,
why. I think of it as like there's this, this money stream.
Right.
I mean, one's more like basically like the Fannie says we view this as like credit card debt, and one's just like, okay, your income's $1,000 less a month.
Yeah, and so if it's taken off the income, that's a lot better, a lot more favorable for how your financials look on paper than if they have to make it or classify it similar to a debt obligation. And so it's one of these quirks that's very relevant and helpful to know in advance, obviously.
Interesting. Yeah. Kind of, I mean, what I was thinking about was just sometimes, to I think obviate's a word, to obviate the need for somebody to pay maintenance. Sometimes maybe to give somebody a little bit more of the property settlement.
Right.
I'm just thinking out loud, that kind of what I'm thinking of a recent case of ours where he did that. And so then, now he's doing a refinance and doing some things, and his income picture doesn't look any different because he kind of took care of his spousal support maintenance obligation just through more of the general property settlement.
Now that would
and oftentimes it from where I'm sitting, it's a good closure issue too. It's like, okay, I'll give you X number of dollars to kind of pay off maintenance, so neither of us are thinking about it, for the next 5 or 10 years, and it's secure. It's money in your pocket tomorrow instead of
it can be good
monthly for 10 years.
Right. It sounds like it can be a good strategy for both parties, and certainly it would be a strategic way to maximize your ability, your financial ability on paper for mortgage qualification and stuff like that. That would be very advantageous to then dispatch of the responsibilities that way versus hanging that, like you said, that ongoing, what for us would classify as a debt burden. Yeah.
Interesting. Anything else? Any other nuggets of wisdom, or just how's the real estate world in general to just somebody watching who wants to buy a house or might be thinking about it?
Yeah, the housing market is really, really strong. Some folks are wondering, is it too strong? And actually, if you look at the historical, where we would be if we just average out modest appreciation over the course of time, which isn't the way it works, tends to go up and down in stronger waves. But actually, if you chart it out historically, we're in pretty good water here, and we don't seem to be like too hot, like a housing bubble, like it was when you looked at it relative to the 2006 numbers, even though now in real numbers we're higher, but when you actually look proportionally, it's really, really pretty strong. And I think the Case-Shiller appreciation numbers came out today, and it's about 16% appreciation nationally, which is definitely a scorching number, very, very strong number. I think it might even be for a year-over-year basis, nationally speaking, the best numbers on record. So I mean, you can't continue that indefinitely, or it would definitely be an issue. But I think for right now, the market is strong. I think the biggest problem, as we touched on earlier, is that for those buyers, inventory is definitely tight. And so if people are looking to get a home, they have to come up with as many strategies as they can to maximize both their affordability, but also, how they can present themselves in a negotiation situation. So there's a lot to that, which would be, another conversation sometime. But yeah, no, it's a great market. The interest rates are so low that I think it's an amazing opportunity still to, whether you're refinance, if you're going to stay, or whether you're going to get a new home, these financial opportunities here are definitely, very powerful.
Yeah, that's interesting. And Jeff, just a wrap. I mean, so who's kind of your normal, ideal kind of customer client, and how can people get in touch with you if they want a mortgage?
Great. Well, thanks for that. I help pretty much all kinds of people with all kinds of situations. So, if somebody needs to get, it's all residential mortgage stuff, but if they end up needing to buy something under $100,000 or over $1 million or anywhere in between, I work with all those folks, and we work on the government side with FHA and veterans through VA loans, and obviously just kind of the bread and butter conventional loans, and even some niche stuff. When people's income or employment is non-standard, we have some great options there. So we're pretty wide, cast a pretty wide net, and they can get a hold of me, either on, by phone or online or through my email. But I'm available online at dkmortgage.com/KOCH, which is my last name, of course. Cook, it's pronounced Cook, but dkmortgage.com/KOCH, and launching pad for everything there.
Awesome. Yeah, I'll definitely link to that in the notes. And are you Illinois only, or are you?
Oh, good question. No,
Just curious, because I might be moving to another state shortly. My next purchase might not be in Illinois.
Right. Well, I'm directly licensed in several states, and then can partner with my coworkers that are licensed in states, other states beyond that. So we can handle, and we can handle most everything in most states of the union. Not absolutely everyone, but most.
Okay. Sounds good. Well, hey, Jeff, thanks again for connecting, and thanks for the expertise. And yeah, I'm sure people can reach out to you with their specific questions, or to put that mortgage application in. So thanks again for your time, Jeff.
Thanks, Peter. I enjoyed it. See ya.
Take care. Bye.
Okay.